Hello, hello, hello. Welcome to the webinar. I'm so excited. So welcome. We'll get started in just a couple minutes now. So first, let me just explain just a little bit about myself. My name is Alma Nantwi. I go by Alma the CPA because I am a certified public accountant. And so what a certified public accountant is actually the highest level of accountancy that you can achieve. So in order for you to become a CPA, it's a nationwide exam. And I'm only saying this because a lot of people don't know, but it's a nationwide exam and you have to have your master's in accounting or a bachelor's in accounting, a master's in accounting, or at least 150 equivalent credit hours in accounting in order to even sit for the exam. So it's a super hard exam. I'm so happy that I passed. Another thing, my dad is actually a retired IRS agent, and my mom is a retired school teacher. So I always like to tell people that I feel like I have the best of both worlds. You know, I love to teach, but then at the same time, I love crunching numbers, right? And that's kind of backwards. Hey, Miss Renetta. Thanks for hopping on the webinar. Thanks for hopping on. Welcome. So this evening, what we're going to go over is how a home-based business is beneficial to you. So I'm going to start doing just a series of different financial education webinars because that's really what I'm passionate about. And I do believe in the power of a home-based business. Being a certified public accountant, I always tell my clients, I tell all my family, all my friends that they need a home-based business. That is the one way or one of the easiest ways that you can really get ahead. We get to save so much money on taxes. We get to, and a lot of people don't realize that taxes is really our #1 expense. When you ask most people, what is their #1 expense? They'll say like, oh, my car note, or oh, my mortgage, or something like that. And that's because Uncle Sam takes his money right off the top. So you really never even pay attention to it, and you don't realize that that's actually your #1 expense. So what I want to do in this webinar, like I said, I'm going to go through how home-based business is beneficial to you. And I'll walk you guys through some various examples. And right after the webinar, definitely we can do a Q&A. So if anybody has any questions, now I won't be able to hear you guys, but I will be able to see it. You can post it in the chat room and just ask your question. And literally no question is too small, but we'll take any questions at the end. Another thing that I want to point out is a lot of times people are so focused on getting a tax refund. And if you think about it, means again, and fund means money. Okay, so I got this from one of my mentors, and it's like, man, that's so true. So a refund is really your money again, right? But we get so excited about getting a refund and feeling like, oh, I got 5,000 back, or I got 2,000 back, or what have you. But in reality, that's your money coming back to you, and you need to get your money now so you can get out of debt, or just enjoy living life. You know, you want to get out of debt. You definitely want to invest and save up money for your future, your retirement, but you don't want to be giving all your money to Uncle Sam. The goal is to break even. Okay. So, I'm losing this earring in the middle of this webinar. My gosh. Okay. So what we're going to do is go through, I'm going to show you guys a few examples. What I'm going to do is I'm going to share my screen and show you some Schedule Cs. And for anyone that does not know, a Schedule C, we'll go through it, but a Schedule C is what you have. It's a profit and loss statement for business owners, okay? And that goes it gets filed in conjunction with your tax return, and the number carries over through the front of your return. So we're going to go ahead and get started. So please, please get ready to take some notes. That would be greatly, greatly appreciated. Get ready to take some notes, because what I do want is I really do want you guys to, if you have any questions, ask me any questions. Literally no question is too small. Okay, so I'm going to go ahead. I'm going to share my screen. See you guys in the chat room. So if someone can let me know, can you see my screen okay? Can you see the screen okay? We should all be looking at it. Says sample for reference for training purposes only, form 1040. Can everybody see this screen okay? Okay, perfect. So, and thank you guys so much. Thank you so very much. So what this is the 1040. We're going to start with the 1040. The 1040 is basically, this is what, oh, my sister's so sweet. She's the one, she texted me. Thank you, Natalie, Flower Child. Okay, so this is the 1040. So a lot of people are familiar with this form. Some people may file a 1040A, which is a little bit simplified, and some people may file a 1040EZ, which is even more simplified. Okay, but for this training, we're just going to go through the original 1040, I should say. So everyone is familiar with this, name up here, yada, 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 right? Single, your filing status. And then in this example, this person is 12 and they have their child on here. Okay. So, and a husband and wife with their child. So let's say they are making $75,000. Oops, and I almost forgot. This is the main part. This person up here is an employee with home-based business. Okay, so HBB stands for home-based business. And now I don't hear you anymore. Can everyone hear me okay? Uh-oh, let me see. Okay, yes. Okay, so I got a yes. Thank you. Okay. I was like, oh no, I'm getting worried. Okay, thank you guys on my text message, and thank you on the webinar, Jim. Thank you, Ms. Renetta. Thank you so much. Okay, so in this example, it's a couple, right? They have no home-based business, okay? So line number 7, it shows they made. So they made $75,000, right? So themselves $75,000, and then we'll scroll down because they don't have a home-based business, so they don't have any other information in any other income, right? And then this area includes any adjustment to your income, anything there, because they just have their job. So we bring down that $75,000. Now, when we get to the back, this part is typically, not even typically, this part is standard for everybody, regardless if you have a home-based business or not. Okay, so we bring over the $75,000 on line number 38. Now, line number 40, this is either your itemized deductions or your standard deductions. Majority of Americans have well, I shouldn't even say that, but a lot of people do have standard deductions. Itemized deductions will be different things like mortgage interest and real estate taxes and things like that. It's a lot of stuff, but what happens is you have to file the larger of the two. So in a lot of cases, even when people own a home, the standard deduction that the government gives you is still greater. Okay. And if at any time, if I'm going too fast, then just shoot me a text message or put it in the chat room, slow down. Okay. So over here, the standard deduction. Now this is, in this example is for 2015. So over here, it says all others, right? So single, if you're single or you're married, filing separate, you get $6,300. Married filing jointly, you get $12,600. And that's what, in this example, that's the example that these people have because they're a married couple with one child. So they're married filing jointly. So right here on line number 40, they deduct $12,600 because that's what the form told us to do, right? So then they deduct that, you get $62,400. Now the exemptions, it says it right here on line 42, exemptions. If line 38 is less, is $154,950 or less, you want to multiply $4,000 by the number on line 6D. So what that is, 6D is they are claiming, I'll scroll back up so you guys can follow. 6D is right here, the total number of exemptions that they, okay, because the husband and the wife, and then they have the child. So then it is, the total is 3. Multiply that by the $4,000 because that's what the form told us to do. Now that comes out to $20. Okay. Now, if we deduct $12,000, so we started out with the $75,000, then we less the standard deduction, which was over here for married filing jointly, standard deduction $12,600. We bring that over $12,600. Now we end up with $62,400. Then the form told us to multiply 4,000 by the number of exemptions on 6D. So we know they have 3. So they have 12,000 right here. So if we deduct 12,000 minus the 62,400, we end up with this $50,400. Okay, now this is where we stop. So let's say they don't have anything else on their taxes. They will be taxed at $50,400. Okay, now depending on what their tax bracket is, so let's say $50,400 if they're taxed at 25%. Okay. So then that would be $12,600 that they are paying in taxes. But we can stop right here. You just see that they get taxed at $50,400. Okay. So now we already said that they didn't have any itemized deductions, but the form is in here just for training purposes. Okay. So they don't have any itemized deductions. So that's it. Taxed on their entire $50,000. Let me scroll back up and make sure you guys write that down. So they're going to get taxed on $50,400. This is a married child and no home-based business. Okay. Now we're going to scroll down because we said they didn't have any itemized deductions. Okay. Now example number 2. Example number 2. We have the same exemption, except they do home-based business. So we have the wife, Joseph work, and then they have their son, Billy work. Okay. So now we scroll down, everything is the same. We got the same $75,000 on line number 7. Now, what is this? Business income on number 12, minus $15,000. So I can show you guys, we're going to keep going through, I'll show you where that's coming from. So business income or loss, here it says attached schedule CEZ to support. This is the information of a home-based business. Okay, so remember, in this is the example of a home-based business. 75,000 minus 15. Bring that down $60,000. Okay. Now in the adjustments to income right here, line 8, it says self-employed semi-plan. So basically that employed retirement plan. Okay, I'm going in and out volume. I don't know why. Let me know if you guys can continue. Okay. So now, this is the self-employed plan. But on your own. Okay, your own retirement plan so it looks like they dollars in there because you get to put money and they get to contribute to from your job, and just as an employee, max contributions amount are $1,000. When you're maxed at $50. So in this case, $5,000 because they're and they're probably still contributing employers for a one plan, whatever retirement plan so now line they have $55,000. Okay, $1,000 where in contract form without the home right here they had 75 because they didn't put anything into this self-employed plan number 28 because they weren't self-employed, right? And then they didn't have anything to deduct on line number 12 for biz or loss. Okay, that's key, really, really important. So scroll down. Now we're on page 2 where again, everything kind of stays exception of now we bring down $55 as opposed to $75,000. Okay, deductions or standard deduction. Back 1 for Mary filing jointly, $12,600 is right here. Net $12,600 from $1,000, which gives $2,400. Now we still get to take advantage of the exemptions that everybody multiply line D by 4,000. This is the married have their son, so it's 3 people by 4,000. So now they apply that, they get $12,000. Now they have $1,000, $30,000 for this. And this is what to pay taxes on. So if we say $30,000 is multiplied by the same 25, this couple is $7,000 in taxes, opposed to example without the home-based business, and I'm gonna scroll all the way back up. They were taxed at $50,000. Multiply that by 25%, they paid $600 in taxes. So you guys can see how, and I'll take you to the Schedule C in a second, but already you can see how much savings you can have by having a home-based business because of deductions that we just went through. And also this person was able to put additional money into their retirement plan. So let's take a look at their Schedule C. I do want to point out that it says profit or loss from business income. A lot of times people will say, I lose too much money, I can't see losses. If that was the case, would not put it on the form. Profit or loss business, it's right there. Okay, so let's scroll down and let's see where that $15,000 came from. Okay, so we see that this individual actually made $5,000 from their home-based business. They made $5,000. Line number 1, gross receipts. Okay, so they made $5,000. They didn't have any sales or returns or allowances. So their gross income is $5,000. Instead of spending that $5,000, this employee, business owner, this entire amount retirement plan. So if we go back up, I just want to show you that's this $5,000.28. Now, of course, it's up to you the money that you earn from your home-based business. But in this case, this couple was like, okay, well, instead of spending that money, we already have the money from our job. Let's make sure that we're straight for retirement. Put that $5,000 in retirement. You may want to get out of debt with it. You may want to invest it in your retirement plan as well. Okay, so back to this. Made $5,000, but reported a $15,000 loss. So let's see where the loss came from. Okay, right here, car and truck expenses on line number 9, we have $8,000. Now this is really, different mileage. You can off your mileage, but in some cases, write off the payments on your car note or your and then of course, and you get to choose between expenses for your car or the mileage is greater. Okay, so we don't know, but what we put off $8,000 in car and truck expenses. Okay. Line number 13, depreciation. Now, depreciation is something that all depreciable. The most times talk about this will be, they'll say something like you don't want to buy because it depreciates as soon as it leaves, which basically what that loses its value. Anything that is an asset, typically or more, loses it. So for home-based business to depreciate, my lovely that I'm sitting on right here, my laptop, of course, these are all depreciable. Now, Chris, they have interest 16, and then it's listed. So I'm pretty sure this is interest from, okay. So for banks or mortgage, probably interest on lease pay. So that's also could be interest for if you have a solely for your business. You don't have to absorb. Now, you don't want to start credit card interest if it's used, right? But if it's solely this thing, yes, that's a tax write-off. So the card that they use for their business, as car, the interest payment. 20 on line 24, travel, meals, and entertainment. This is one of my, okay, so this person just wrote off $2,000 on travel, meals, and entertainment. So part in a home-based business owner, you do get to write things off. I just got back from Miami a few weeks ago. We had our annual yacht party. It was a yacht, but that expense was tax deductible. Okay. Meals and entertainment. You go out with your business partner. One of my good friends and business partners went to, they actually rented a suite, but what they did on the internet, everybody that went to the concert of the home-based business, everybody used a sign-in sheet as soon as, and of course, when people are we signing in, like, oh, well, this is part of my home-based payment for me and my business partners and on our taxes. Okay, during or whatever the break, through a 5-minute presentation, made their Beyonce tickets tax was entertainment expenses. So $2,000 on line 24. Line B, oh, I'm sorry, that was travel to wherever you're going, and then $1,000 entertainment. And it's okay, because one of the things on line utilities, one of the perks of business is of a percentage of your, as long as you have a home office, a portion of expenses off. Figure this out, you basically take the square home, by the size of the office and write off. Line 26, they have various employee $5,000 too. This can be different subtype that you have help you out with, things be your children, which is a expense for home-based business. Since you are a home-based business, to write off anything that you pay and that'll be another training. And them their allowance, you have the employee, right? Later, in more detail, but $5,000 to their employees, which brings expenses to $20,000, and that's how we came up with the $15,000 on line 29. And now that loss went up the 1040. Okay, it went up to the 1040, and that's how we were able to reduce the amount that was taxed. Here for purposes, nothing was itemized. Okay, so all these lines are blank. This is just for the home-based business. Now, last and definitely not least, okay, we have example. This is an employee also with a home-based business. So we have Joseph work and Mary work. Oh no, it may be an internet connection problem. Great, I can't understand. Oh, I don't know what's going on, but what and thank you. And if anyone else, what I'll do is, this is it. So maybe it won't be so spotty, and I'll be on Facebook, as YouTube. So I helps. I'm not sure because my internet strength is showing, but who knowledge is literally crazy. Could be going in and out. Maybe right now it's showing. Maybe it's going in and out. But so let's go ahead on, and definitely, if you guys have, feel free to add the information that you can understand. Okay, so people Joseph and Mary work and their son Billy work, okay? $75,000 from their job. And what is this? Line number 12, $20,000 in the business. So now this person made $20,000. So just for illustration to show, a lot of people think, oh, money so it can be beneficial. Okay, so a 75,000 plus 20,000. Their take-home pay is $5,000, $95,000. But now they decided to do the same exact thing. Instead of spending $1,000, they are putting their retirement plan. Retirement plan, which again, this is on line 28. Line 20, employee retirement plan, $8,000. And again, when you are a two-worker, your max contribution $18,000. When you're you can max out at $5,000 into your retirement, and that does not include any catch-up payments. You get some money if you're over 55 years. So now $1,000 into retirement plan, which is the 95,000. So now the 75,000. What we example person, except their dollars greater in their investment account. Okay, so scroll down. We got the 12,600 for exemptions. I'm sorry, for their standard deduction, which is over here. The form tells us how much to put. 12,600. Deduct that. Now we are at 6,400. 2 tells us to multiply 1,000 by 6D. He is the 3 people that are claiming, so 12,004. And now we are at $8,000, $400. Now, the cool thing about this example, just to point out a couple of things. Okay, so in example number 1, employee's taxable income was $10, $50,400. So let's go back up just so you guys can see for illustration purposes. If I go back to, this is the example number 1. Okay, employee with no home-based business, right? They were taxed at $50,400. So if we use a tax rate of 25%, that means their taxable income is the taxes that they owe are $12,600. Okay, that's a lot of money. And this is not taken into, this is just total taxes due. A lot of times real taxes. So 9 times out of 10, if they owe $12,600, their employer probably would have taken out about $14,000, and then they would get a tax refund, which they would be excited about and maybe feel like they didn't pay anything. And this illustration is just to show you the case. So the tax a year would be $12,000. So now if we go to example, now this is our employee with a home-based business, okay? Scroll down. Now this employee made the same amount of income on his job, right? The $7 right here on the $75,000, but also made $5,000 in his home-based business. And so what that ended up meaning was, not only did they make $5,000 that they could put into their they put that in their retirement 28, but had business expenses $20,000. to feel a negative on their Schedule C, their taxes down to $60,000. Then, like I said, they put the $5,000 into, was an additional deduction, $1,000 into a retirement, which reduced their tax liability either. So with everything being the same on this page, now we get to line number 43. Their taxes are their taxable income is $300. So if we multiply that by the same 25%, the taxes owed would be $7,600. So in this example, the employee ended up with $1 more and $1,000 in their bank. Okay, so that's the total increase of $10,000. They were able to make $5,000 in their account. And this is having a home-based business line that can hear my voice. This person process. Let's say they don't make any more money. If they repeat every single year improvements, and if about half of their, they could invest like $5,000, that would be $5,000, right? Because they're keeping $5,000 and set at an 8% interest here in $6,000. 20 years, that's, $240. And 30 of the magic of compound, 30 years, that's become $621. This is just the power of interest and the power-based business. Instead of you taking that hit, now you want to put it up account, and that's how much you grow. And this is only $1,000 extra per year, and that's not that hard to do. Okay, so now if we scroll down, this was the example, right? They made the $5,000 right here. We already went through this, and they had the $9,000. So now if we go to our third example they made $20 in the business. So they made the same amount of money at their job, $75,000. Then they had $20,000. Oh, you know what? Then I didn't even go to their Schedule C. So let's look at their Schedule C. The profit was $20,000. I'm so sorry. They actually made $40,000. Woo! In their home-based business. Now that is excellent. They made $40,000. But let's take a look and see what they did, because they only had to show only 20 to the front of their 1040. It only showed a $20,000 profit. So we had the same $8,000 on line number 9. Okay, 13, depreciation, the same $1,000. 16, probably lease interest payments or payments, so $2,000. $2,000 on line 24. Line 24 for taxes, for travel. They also had $1,000 bills, and then they had $1,000 for utilities. Then they also went ahead and, the $5,000 for their employees. So now in this case, they actually had the same amount of expenses. If you guys remember, this is the same expenses as when they made 5,000. But instead of making the 5,000 and having a loss of 15,000 down here, they made 40,000 up here. Their gross income or gross receipts from their business was 40,000. Then all their expenses were $20,000, which means that their profit is $20,000. Okay, so they made 40 in the business. I want to make sure that I make that clear. They made $40,000, but they're only paying taxes on 20 because $20,000 were tax write-offs. So now the $20,000 that they were profitable, or whatever $20,000 you want to say, put that into their end. So now that's a $95,000 gross income. Deduct this $20,000, and now you're at the same $75,000. So, and then everything remains the same. The deductions, the itemized deductions, the standard deduction as well. So now they are on the same $50 or $100 as our first. But the difference by having a home-based business, able to put an additional $1,000 into their household from business income. Okay, provided them with $1,000 tax deduction because we showed an example of the $20,000 that they wrote off. I'm sorry, I went the wrong way. The $20,000 that they wrote off right here, $20,000 to write off. And then they put an additional $20,000 into their retirement plan. So I hope you guys can see how beneficial having a home-based business is. So now in their case, their tax was $50,400. So the taxes owed at 25% is the same $12,000 as our first employee with his business, only getting all of his income, opposed to making an exit, pocketing the $20,000 retirement plan, and then on the $50,000. If in this case, let's repeat the same exact, no improvements, and if half of the cash flow, even the whole $20,000, even the whole $40,000, let's say that $20,000, 8% interest, return on investment in $305. Okay, in 20 years, it would be $82,000, and get 30 years. I almost know in 30 years, and $1,000 at 8% will get them $2.5. Just from investing that money interest. Now this, ladies and gentlemen, of having a home-based business, so it's clear to you guys. Somebody says tax advantages of a home-based business, and I decided to shoot this video because so many times I just was under the impression I don't really understand when I'm saying that to write this off is a tax rate, much, you know, how it tax advantages that you have in a home-based business. I hope that everybody can, and let me see. I was so close to the screen so you guys can hear me. That's so funny. So I hope that you guys can just see. I hope the examples helped you guys just to illustrate the importance of having a home-based business and how it actually works, how it's beneficial, how it actually puts money back in your pocket. And then just gave you guys a couple of ideas of what you can actually do with that money once you get it. Because a lot of times people may say like, oh, well, I'm living comfortably now, right? I hear that a lot of times, and that may be, but let's think about it. When you get to the point where you are ready to retire, you don't want to, because you don't want to work forever. So eventually you get to a time where you are ready to retire and you want to start putting money up towards your retirement. So I hope that that was helpful, everybody. And if we have any questions, please go ahead and post them in the chat room. That would be greatly appreciated. Just post them in the chat room. And if not, then we'll go ahead and get out of here. Everybody have an amazing, amazing evening. And I'll make sure that I keep you guys updated on any other webinars and videos that I'll be shooting, because that's my whole goal. I just, you know, each one teach one, change the world. I feel that I've been blessed with knowledge and even numbers. So many people are afraid of numbers. So many people hate finances. And I'm not one of them. So I do feel like it's my responsibility to share this with everybody and make finances fun. Okay, that's what I do. Make finances fun. I'm the CPA. So we don't have any questions. We'll go ahead and get out of here. But actually feel free, when the replay goes out, you can reply to the replay and ask me. I will be YouTube as well, and you can respond to me on YouTube, ask me any questions, or if you email the same link that you subscribe to the webinar on, it comes directly to my email address. Okay, so I will talk to you guys soon. Oh, also feel free to reach out to me on all social media platforms. I shouldn't say that. On social media platforms, I'm on Facebook as Alma Nantwi, and I'm on Instagram as Alma the CPA. It's AMA. The CPA, and Nantwi is NANT. Also, I'll be posting my YouTube channel is Alma the CPA. So please go subscribe to that, and I'll be posting more videos on there as well. So good evening, and I will talk to you lovely people later. Alma the CPA.